Hi everyone, good morning. My name is Skander Matoussi. I'm an assistant manager leading digital for financial services at EY Tunisia. It's great to be here with you today. I want to thank especially our partnership with Temenos, who gave me the opportunity to be with you today. So, today I'm going to talk to you about how disruptive innovation is transforming financial services as we know it, namely the neobank revolution in digital banking. I will be, of course, more than happy to answer questions after the presentation through the Q&A session. So, very quickly, I'm going to talk to you for the next 10 to 15 minutes. Very first, I will talk about the adventure that has been neobank revolution so far. I will give my insight on the Egyptian context on digital banking today. I will introduce and describe the innovation levers that characterize the quick surge of neobanks today, how their business model is designed to serve those levers. Then, based on what I have seen in my experience from working with and talking to the bank executives, what we deem at EY to be the principal dilemma that is facing banks, which is whether to stick or to twist. Then I will give the key to navigate that dilemma, which is essentially to look at the market and try to really understand the different adoption drivers and attributes of digital banking. Then lastly, I will share with you what we consider at EY to be the 5 digital imperatives for traditional banks to remain in the running and build an extensive set of digital capabilities. Well, but before sharing my perspective around the future of digital banking, I would like to stress the fact that we are currently going through the biggest transformation in financial history, the neobank revolution, and it's definitely going to transform banking as we know it. First, let's all agree on what a neobank is actually. It refers to fintech, which is short for financial technology. So neobank is the innovative use of technology in the design and delivery of banking services that operates digitally or via mobile app. And probably the innovation here is that these newcomers have the ability to pick and choose the part of the bank they want to get involved in. Obviously the most profitable part. It's very unlikely, in fact, to see neobanks wanting to become a deposit-taking institution. They are indeed very happy to control the front end, the customer-facing part, and leave the back end to traditional banks. And this may create a new banking model in the future, where the traditional banks are handling the back ends, and where the neobank control the front end and the customer experience. So basically, to summarize, what I'm saying is that neobank, most of the time, don't hold the customer current account. They are only holding the front-end experience, leaving the current account to the traditional bank partner. But the question is, why is the neobank revolution happening now? So historically, as technology evolved, banks were very good at integrating those new technology in order to better serve their customer. Yet all of that changed during the financial crisis of 2008. During the financial crisis, actually, banks were busy dealing with the numerous new rules, regulatory requirements, and fines imposed on them. Innovation, therefore, became a very, very distant priority. But at the same time, some of the most game-changing technological innovation have transformed the way we live and became part of our everyday life. Think about iPhone, Netflix, Airbnb, Uber, or even WhatsApp. Thus, a gap was created between what banks are offering to their customer and what customer came to expect, especially from a user experience, user convenience, and process simplification perspective. And that gap actually is what the neobanks are tackling right now. So, let's now have let me give my insight probably on the Egyptian digital context. So when we actually look at the market today in Egypt, from the supply side, we see that the fintech ecosystem in Egypt is characterized by a certain degree of contradiction and dichotomy. In fact, the ecosystem is evolving rapidly when it comes to deploying innovative solutions. However, it is struggling to attract additional financing that will boost its footprint and impact. Besides, banks are keen to engage with fintech in a broad range of exploratory projects. However, they are reluctant to integrate fintech into their strategy, and they prefer to follow a wait-and-see approach. Same thing, banks are not leveraging the full suite of fintech solution and feature to address customer needs and requirements, to enhance the daily banking journey and experience. In fact, there are still relatively little activity happening. If you take consumer, for instance, there is really few examples of challenger bank that is actually out there in Egypt today. We can quote Dopay or Khazna that are only a few years old and some kind of standalone.
Hi, sorry to interrupt you, but we don't only see the first slide at the moment. So just to make sure that the slides are working and it's
Yes, I'm moving actually, but you are not seeing my screen. So maybe I will get back to the old version that is downloaded here.
Okay, so right now I'm seeing a change in the slide.
Now it's moving, Skander.
Yes, now it's moving?
Yes.
Very good. So we are here. So I will start from this slide, okay?
Please, yeah, thank you.
Thank you. So when we actually look at the market today, from the supply side, what we see that the fintech ecosystem in Egypt is, like I said, characterized by a certain degree of contradiction and dichotomy. In fact, the ecosystem is evolving rapidly when it comes to deploying innovative solutions. However, it's struggling to attract additional financing that will boost its footprint and impact. Also, banks are keen to engage with fintech in a broad range of exploratory projects. However, they are very reluctant to integrate fintechs into their strategy, and they prefer to follow a wait-and-see approach. Besides, banks are not leveraging the full suite of fintech solution and feature to address customer needs and requirements in order to enhance the daily banking journey and experience. In fact, there are still relatively little activity happening in Egypt. If you take consumer, for instance, there is really few examples of challenger bank that is actually out there. We can quote Dopay or even Khazna that are only a few years old and so kind of standalone. For instance, what Khazna has done is they have opened up inconvenient mobile financial services to the underbanked population to substitute the informal market, of course in a partnership with the major banking and corporate partners. Now, as we look across the bank in general in Egypt, I think they are much looking to upskill their people. They're trying to kind of understand the business model and how rested up they are. But by large, there is probably what we call an inconsistency to the approach and the focus across the different banks. Some banks are definitely quite focused on it and probably making some good progress, but that wouldn't be the case in all parts. Traditional banks have probably, or maybe surely, an inconsistency feeling as to how to deal with the neobank threat. On the demand side, however, as you can see on the slide, we have 32% financial inclusion in Egypt, which is considered to be a relatively low rate. But at the same time, we have 94% internet users, 90% smartphone users, and above all, we have 41% active social media users with an annual growth of 22, which is huge actually. Obviously, many tech firms in Egypt, just like Facebook, Google, or even WhatsApp, have daily existing touch point with Egyptian customers. And to a certain extent, they earn their trust and confidence. So don't you think that if a user is comfortable enough to share their kid's photo on Facebook, wouldn't they use it as well as a bank or maybe to transfer money? Here is the point actually. So what we can definitely say is that today we are seeing in the Egyptian market a gap that is widening between what banks are offering the customer and what customers expect from their bank. So So now I will introduce the 3 innovation levers that have actually widened that gap between challenger banks and traditional banks. So first, we have customer experience. Customers feel that their financial needs were better understood and better guided by alternative banks, by neobanks actually. In terms of spending, for instance, the focus on real-time insight. It could be just a push notification, for instance. In terms of credit experience, namely the use of AI model and analytical engine to enable a faster decision. As a second lever, the user's convenience. Consumers are demanding ever more consistent and convenient way of accessing banking needs by tapping into the local ecosystem, by collaborating with technology specialist firms, for instance. They are also, for the small and medium business segment, they are also asking for an automated accounting and cash flows. This has a very big impact on the customer experience for this segment. And finally, we have process simplification. In fact, consumers are willing to try new banks platform to simplify actually financial operation. And no better example than the onboarding, the fast onboarding. In fact, clients need fast onboarding like in very few minutes. And if we take, if we illustrate with Revolut, which is an Irish fintech, we take 3 minutes for the customer to open a bank account, 8 minutes for the German fintech, and 26. So now that we have introduced both levels, let's introduce how their business model is actually designed to better serve those levels. So as you can see, unlike traditional banks, which base their distribution channel on physical branches, neobanks adopt a distribution model that do not rely on branch network, but rather on a marketplace community through open APIs, which therefore lower customer acquisition costs. Just to illustrate, distribution costs typically run at 6% of overall cost for neobanks, compared to an average of 27% across the traditional retail banking industry. Also, an average challenger bank's cost of customer acquisition range from $1 to $38, compared to around $200 for traditional bank retail. So when it comes to the tech infrastructure, unlike the neobank who use an open architecture technology that open the ability to plug and play best-in-class tools and services and easy access to external third party, traditional banks suffer from a non-modular architecture with limited scalability, coming most of the time from a rigid legacy platform. So I guess, in summary, what we can say about neobanks is that they are redesigning their business model around customer centricity for significant user growth. And to do so, they are creating an ecosystem of service around the infrastructure, shifting the banking value from branches to their API layers. Indeed, the 3 benefits of an API model are faster user expansion, a controlled time to market, and the ability to monetize financial data. And this is what neobank understood at a very, very early stage, widening that gap between them and traditional banks. Therefore, in the light of all these considerations, I can say that traditional banks are definitely facing a dilemma. And I do think that the dilemma is slightly deeper given the uncertainty they are fronting, because banks actually really don't know whether to stick or to twist. So we have banks in the stick camp who are probably looking at the challenger banks as the preservative of fintechs and neobanks, for which they are actually the supplier. And therefore they are kind of inclined to let things play out in a bid to resist to the move. On the other hand, you have the bank in the twist camp, which are much looking at challenger banks or neobank as an opportunity to innovate, to bring new product and experience to the market. And they are probably looking at owning the current account, something that the banks in the stick camp may hold as the key, as maybe a less important thing as opposed to the new customer experience, the new product that you are actually delivering to the customer. Personally, I think, you can argue all day long whose strategy is wrong, whose strategy is right. What we believe, however, at EY is that the answer is really to look at the market, look at the adoption drivers and attributes across a wide range of segments. And here, yes. Okay. And five adoption drivers, like I said, and attributes that we are seeing at EY are basically speed, transparency, lower costs, user experience, and an improved financial wellness. And as you can see, over those five key adoption drivers, challenger banks are running ahead compared to traditional banks so far today. So therefore, if we go to the next slide, so therefore, we thought at EY of 5 digital imperatives for traditional banks to remain in the running actually and build an extensive set of digital capabilities. So first, use data-driven insight and analytics holistically across the bank. Second, create a well-designed, segmented and integrated customer experience. Then build a digital marketing capability that equal e-commerce giant. Aggressively mitigate the potential cost advantage of a tracker through radical simplification and process digitization. Rapidly leverage and deploy the next generation of technology from mobile to agile to cloud. And then rethink the legacy organizational structure and decision to support actually the digital environment. Finally, before turning back the floor, I would like to give 3 takeaways. First, it's really important to embrace the neobank evolution and get past the notion that you own the customer by owning the current account. You must understand your target segment and their specific unmet needs and adoption drivers. And finally, deliver an experience that addresses that. So I think these are the recipe for success. And thank you for your time. And I head back to Shahdan, I guess.
Thank you so much, Skander, for this very insightful session.